Monday morning, folks. Welcome to a brand new episode of the Finmet Mondays podcast. Sunil, gold has seen a lot of movement above and below 4,000 levels. We've seen the US China trade truce come to some sort of a reasonable closure. We're also seeing an interest rate cut that was executed by the Fed by 25 basis points. We'll come to that later, but separately, you all attended the Lbma conference recently. I think that was a very important conference that brought and united a lot of the market participants together. What was the flavor and talk in the conference? If you could give us some insight about that.
Right. So this is an annual conference which brings all the sellers and buyers and traders, middlemen, brokers, all involved in the precious metals market together at one place. And it was held in Japan this year. So there's three takeaways I'd like to share with you today. The first one was just that it was a record attendance. There were 940 people. The highest previously was a couple of years ago was 750. So this was almost 20% more. And I think what we saw with the attendance was there's a wide range of new players who are getting to market. So this brings me to the second takeaway, is just talking to the people. What we found is there's a whole segment of the market which has opened up in terms of consumption. You saw people from hedge funds, from sovereign wealth funds, from family offices, even crypto traders coming in who wanted to buy gold-backed tokens. So there's a segment of the market which has just emerged in terms of demand. And I think that's the reason why gold has been going up, because the sellers are restricted, the buyers are new and fresh, and so that's been pulling the gold price up. So I think that was a great takeaway for us. The third thing that came out was that the overall perception, there was a poll done where they asked the participants, where do you think the gold price is going? And the average projection was close to $5,000 for the next 1 year.
For the next 1 year, okay.
Right. So by December next year, or actually October next year, people are expecting $5,000 to be hit. So that'll give you a summary of how this sort of group of people were thinking and why the market is so bullish. Because you've got these new players, the amount of gold that's available is still the same. And so more buying coming in has been pushing the gold price up. And the general view was that that's going to continue, that people will continue to keep buying. When I talked to people, why are you buying? The general reason was more long term. Most of the people are buying gold because of diversification. There were large investors in the market, in the financial markets, who had invested in equities or bonds or crypto, who had no exposure to gold. All these people now feel that they need to have at least between 1 to 5% exposure. So I think these people, the shift of these people getting into gold remains. So they're not looking at short-term factors. I don't think they're going to be at all shaken in their approach. And I think they will continue to buy. The only thing is they may be looking for opportunistic buying, waiting for dips to buy. That's why you saw, even it came off, there was a lot of buying at 3,900, 3,950, and we jumped back above 4,000 very easily.
Correct.
So I think these buyers are just looking to buy. And so I think the support is very strong.
Thanks a lot, Sunil. That was a good takeaway for us. Let's see how the markets play out this week. But till then, thank you so much and goodbye.